The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. Well, today's the big day. The Federal Reserve will be out at, I believe, I think it's around 2:45 or something like that, or I'm not even sure. It's the afternoon, I believe. She'll start giving her talk. My guess is a quarter-point rise, and then they'll talk. They'll massage these numbers, and this is where the market goes nuts because of lack of liquidity. So don't, I prefer to wait until after she starts the talking. But one of the ways you can, pick things off is to by the way, we started off the show with the DAX. I should start that out. As you can see, we've had several ABCDs here. We're in the midst of a trading range. Whether the Fed today will do anything different or not, we'll have to wait and see, or whether their action will do anything different or not. Folks, this is the third rate increase in 11 years. Can you believe that? If someone would have told you that 11 years ago that there would only be 3 rate increases, I don't think anybody would have believed that. Well, that's neither here nor there. Okay, let's take a look here at what the bonds might do, and then I wanted to talk a little bit about David Ackerman, because I think it's important to keep in mind about what trading is all about. Let's just put this chart in on the bonds. Here's what I'm looking at on the upside. I would be looking for a sale up around that 147.24. I'd be looking a buy down at the 145.15 level. That would be down a point. So up a point, down a point. I would be looking for a potential to do that. But the way that I would do that would be to wait till after she starts talking, because I don't think the quarter point will mean very much. The two big surprises, and I don't think you're going to see these because they're so conservative, is that they would raise it a half a point, or they don't raise it at all. If they don't raise it at all, there's something really wrong. I mean, they know something that nobody else does. Well, who knows that? Anyway, let's talk a little bit about Ackerman. He had this stock, I don't know what it's called, what's it called? Valiant Pharmaceuticals. What he did was he sold a $2 billion profitable stake in Allergan, I believe, and then he rolled it over into the Valiant, and he was totally off his game. That's not what he does. He's like Icon. He looks for things that are, on the cheap, much like Warren Buffett does, takeover candidates. This one was very, very expensive. There was nothing wrong with what he did. What he did was, if you'll read a book, folks, I really recommend, you go out and you spend $50-$60 on a dinner, and it's gone in the next 8 hours. But buy a little book by Roy Longstreet called Viewpoints of a Commodity Trader. It's basically very similar to the Reminiscences of a Stock Operator by Jesse Livermore without all the stories. It's just the little vignettes that are so good. And two of my favorite in there that I used to talk to him about this is the first mistake teaches, the second mistake kills. And that's right. Your first mistake was he went in to the Valiant. There's nothing wrong with that. That was his first mistake. The second mistake is he didn't have an exit strategy. It reminds me of an old movie. The theme of the Navy SEALs is live hard, die young, and make a good-looking corpse. That's what their theme is. They got that from a old movie from the 1940s, Knock on Any Door. And in that, the detective comes into the room and he looks around, and the guy says, "Why are you looking around?" He says, "I never walk into a room until I can find two exits to get out of the room." And that's probably what the trading is all about. So the first mistake teaches, the second mistake kills. You've got to remember that that's a very, very important context. Important context. I think it's just absolutely terrific. Now it's not the money that's bought. This is not the money that's wrong here, folks. This is not the money. It has nothing to do with the money. It's about his ego and how he's feeling emotionally. Do you know what I mean? And that's it. That's very good. Thanks for reminding me, Steve. God bless you. The first mistake teaches. The second mistake kills. It's very, very true, and you want to remember to do that, because it's very important to get through that. But that little book has got so many wonderful things, in it that really help you about the trading. One of the things that I have a tendency to do is, well, probably other people do too, is I'll have an opinion on the market because of the patterns. I look at the patterns and, gee, this looks like it's, going to be working, and I have a tendency to tell myself that it's going to be a situation of whether I'm, Guffey, you put a lot of stuff in here. Oh, I don't know where you got that, Duffy, about Roy Longstreet, but that's really good. Yeah, Roy Longstreet's book is a fabulous book. Anyway, I have a tendency to be opinionated, like most people do, but like Paul Tudor Jones says, lose your opinion instead of your money. And that's what if he would have done that, he would have not had any problems. Now, people say that's it, he's done. He's not done. What are you talking about? If you remember long-term capital with John Merriweather, they had all the Nobel Prize economists, and they had the world by the tail in 1995 or 96, whatever it was. And the next year, they forgot to realize that they were the market, and they had no way of getting out when the market turned. And they pretty much went tapioca if the Federal Reserve hasn't, pulled them out. So it's a question of learning to do those things, because if you don't, you're in big trouble. That's the thing. The same thing with any of these things you're doing, folks. Honest, it really is. That's if you nibble at it, you're not going to have any problems. It's when you have this long-term opinion, or where you have to put up a lot of money with a lot of downside exposure. That's not a good thing to do. He made a lot of mistakes. He realizes that, but he got emotionally involved in the stock, and then he got involved with a peeing contest with Jim Chanos, because Chanos said he was totally wrong, and Ackerman says, no, I'm right. So what do? They have a testosterone rush, and Chanos, he won that one. He wins a lot of them, as a matter of fact. But he won't take that same type of trade, folks. I did the same thing in 1974. I was a little whippersnapper, didn't know diddly squat. I thought I did, but when the market started down in 73, I didn't see it, and it was affecting commodities. And that's what I was in, that we didn't have stock index futures back then. And I had to pay the price, but I learned from it, and that's pretty good. Yeah, he took the twigs and the berries. You're right, JP. Anyway, just remember, he's coming back. Don't worry about it. He's probably made money in other things, so it's $3 billion. I don't know how much he had in his fund, but he's going to be right back in the game. So I don't think there's any big deal about it. 877-927-6684.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry, powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back, folks. I have some news. We lost one of the real beginners of the old charting package stuff years ago. Walt Bressert passed away. He was the owner of Hal Cycles, and that was out of Tucson, Arizona. That's one of the reasons why I moved to Tucson. I used to come over here and visit him back in the 70s and 80s, and he and his wife Teresa were really great. Hal was the name of their St. Bernard. That dog was bigger than me, and I was a lot smaller then, but boy, he was a big dog. Lazy as all get out, but he was a beautiful dog, but that's how they named it. Anyway, Walt had been suffering from Alzheimer's for quite some time. He was living in Las Vegas with, I believe, his sister, Larry Williams. I talked to Larry quite a bit, and he was the one that told me that he was, I knew that he was in bad shape because I had talked to him about 5-6 years ago, and he could barely remember who I was. And then later on, I understood that he just didn't remember anything, and he finally did pass away from Alzheimer's. But the reason why he's so important, folks, you guys look at these charts, and I just posted the one here on crude oil that we were looking at yesterday. You take these for granted, but let me tell you, we didn't have any of this stuff until 1983. We didn't really get good charting packages until 1983, and it was because basically Walt Bressert was one of those people. He and Jake Bernstein and Tim Slater at CompuTrack, these were the guys that put together their little computer that they had. I forget what the name of the darn thing was. And you could actually get intraday charts and started to see oscillators and stuff like that. That's right, Duffy. We all used to do our charts by hand. I used to sit at the Drexel in my office in Drexel, and if I wanted, you couldn't day trade because you didn't have any really good price action. All you got was intraday electron for what was that? Yeah, I think it was called Electron or something like that. And anyway, you really didn't have any of that stuff. Yeah, I don't have my hand charts anymore. I wish I did, Basil, but son of a gun. But anyway, he's one of the real reasons, why we have all this stuff. That was the reason I went to the Chicago Mercantile Exchange in '82, because I could see. I used to remember we used to get those commodity perspectives by special delivery every Saturday morning, and I would do my charts. And when I was done with my charts, my daughter Laren would cut out the charts with the little triangles on them, and she would color them, and she'd put them on the refrigerator. And I'd look at that, and I said, "Gee, that looks like a butterfly." And that's how I came up with the idea of the butterfly a few years later when I met Bryce Gilmore, and he explained to me what I was actually looking at. Anyway, that's we all owe Walt a great deal of accolades and gratitude, because he did so much for us, and he was really a pioneer in cycles. I met Walt in 1970 along with John Hill in San Francisco at the meeting for Jim's Hurst Profit Magic stock transaction timing. They came out with a service called Cyclotech, which was similar to Commodity Perspective, but it had the cycles put on the bottom of the charts. And it was quite expensive, but you made a lot of money at it, so no one really cared. But then when the cycles started to shift later, they went by the way of Eastman Kodak. One other thing about David Ackerman, they said this was the greatest, the stupidest trade in history. Hello, everybody. Hello. We've all done these, not maybe that to that extent, but he bought something at 198. At least he had the courage to sell it at 11. Look at the people that were in CMGI, Global Crossing with Gary Winnick. How about Enron? I mean, give me a break. There's a lot of these going on there. There's so many of them. WorldCom. I mean, you could go back to the .com bubble, and many of these things, don't even exist anymore. So it's not even close, probably, of being the worst trade ever. Yeah, there's another one. All of these, there's so many of them and don't be hard on yourself, for heaven's sakes. Hey, folks, you're not going to believe this. I'm going to give you a little quick question here. There's another little book that I love, that I really love, called Only Yesterday. It it describes everything from 1920 all the way through 1938. It's called Only Yesterday, and it goes back. Do you realize in 1929 there were 2,000 automobile companies in the United States? This was the inventing of the automobile. Can you believe this? Do you know how many stocks in the Dow Jones Industrial Average? There's 30 of them. How many of stocks went bankrupt during the break from 29 to 16? Over half. American Telephone went bankrupt twice. So, just because that happens, and thank you, Marshall. Marshall has been kind enough to put in one of my favorite quotes by Winston Churchill. He was giving a speak at I believe it was Cambridge in 1939, right when it was the real bad part of the war for Germany. Of course, they had it pretty bad all along, but he got up to give the commencement address. He walked onto the stage and he said, "Never, never, never quit." And he walked off the stage to a standing ovation. And that still goes down as one of the great speeches ever. So anyway, just to remember, it's you just got to learn as you go. That's basically it. And, learn from some of these books. And that's pretty much it. Nothing new ever happens under the sun. And, who knows what's going to happen with the Fed today. What they're doing to the Fed today is no different than what the major news things do for the election, or anytime somebody tweets something. They have to talk about something, because if they don't, they don't get advertisers, and that's how they get paid. That's how they pay, Kramer $2 million a year. I mean, it's a business, and you got to realize that all this information, and everybody has an opinion, right? And we already know what that means. All right, let's take another quick look here at what the crude oil did yesterday. We ought to try to make a couple of bucks if we can. We came down, we hit that spot on 61% retracement. We went 20 cents below it. We were looking at 47.32. We're now trading above 48 and change. I wouldn't let this go to a loss if you bought it there. If you'll notice, you have one of Mr. Rhodes's favorite patterns there. I believe it's a hammer bottom, right at a 61% retracement. It's very similar to the break that we had in November. Between October and November is similar to the one we've had through January and March. So you've got some symmetry there. You have higher bottoms from August, November, and March. That makes it a 135 pattern. There's a possibility that this thing could have legs. Now, I know that, there's a lot of negativity about the supply demand and stuff, but, that stuff was known a long time ago. That's pretty much it. So keep in mind that there's a possibility we could get a really strong rally, at least $4 or $5 up to the old breakdown at 52. That could very easily happen without any trouble at all. There's no question about that. I don't know what it is about when I come on here, but when I come on, my burglar alarm goes off. I don't know what's going on. There must be something happening. Hold on just a second. Let me put this up here and take a quick look at it. We want to take a look here at Twitter. Here's another perfect example. Let's take a break. 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and we were talking about this book, Viewpoints of a Commodity Trader by Roy Longstreet. During the break, I went to try to find. I've just got too many books, and I couldn't find it. So I'll try to find it later today and bring it out tomorrow and give you some of the great quotes that are in there, because it's just got a lot of them. He's a really nice fellow. They're in the den there. They're showing some of the great quotes that we've heard. It's a good judgment comes from experience, and experience comes from bad judgment. So that's basically it. Anyway, that's from a guy named Jim Horning, and they thought it was the football player Paul Horning, who played at Notre Dame, and then he also played for the Green Bay Packers, and he was great. I was fortunate enough to meet Paul Horning a couple times. He loved to play the horses, and when he was in California, he would go to Hollywood Park, and I was there on one particular day, and we were in the Hollywood Gold Cup room. This was during the big race. It's basically the Kentucky Derby of Southern California, and I happened to be a friend of Robert Wagner, and his wife is Jill St. John, and I had only met her once before, and my daughter Laren had wanted to go to see the races that day, because Drexel had this terrific box, and most of these people at Drexel never used it, but that day they were. So the fellow that runs the turf club sent me up to the Hollywood Gold Club room with my daughter, and so we were sitting there at the table with Robert Wagner and Jill St. John, and Paul Horning came up. He wanted to meet Jill St. John, because she was wow, she was really beautiful. Anyway, she was really, really cordial to my daughter. Laren was, I believe, 12 at the time. Yeah, she was 12, and so she took her into the the ladies' room, and when she came out, she had made her up with makeup, and I couldn't believe my daughter. She was, I thought she was like 25, and she was only 12. But anyway, Horning came up, and he was talking to Robert Wagner. We introduced ourselves and stuff, and he was looking for a horse. I said, bet on number 5. I said, he always wins, because that was his number when he played for the Packers. But anyway, those were the old fun days. That was the real advantage of working at Drexel, was all the perks that you got. It wasn't the money. Money was great, but it was the perks, the people that you got to meet, and the things that you wanted to do. If you wanted to have something done, people at Drexel could get it done for you. They didn't want money. They worked on the thing. You scratch my back, I'll scratch yours, and that was really a fun time in my career. Okay, let's get back to some of these markets. You get tired of listening to this old dog. Let's take a look here at this other one that we want to take a look at is Twitter. This is there's probably just as many of these stocks like Valiant. Well, not quite, but look at Twitter. It's almost in half from where it was in October during one of the biggest explosive bull market we've had in a long time, up 23% in just a matter of a few months. And yet Twitter is heading in to the sewer. It's already below the 78% retracement in May. If we get below 11 in this, it might not make it. And with all the stuff that's out there, it's really, it's no one wants to buy it. That's the bottom line. Just look at the chart. If there were some buying, there'd certainly be, something, really big to looking at it. So we'll see, what's going to happen. It's that's pretty much what we're looking at here. So we'll keep a close eye on this. Folks have asked me, what the market's going to do today. Well, I can tell you with 100 degree of certainty, I don't know. I try to react to what I'm seeing, and that's really all I'm trying to do. I really don't know where it's going to go. I think I do, but I really don't know. So I have to rely, pretty much on the pattern. So, keep an eye on. Remember, everybody is bearish bonds. I mean, they know bonds are going to go down. That don't mean bonds can't rally 4 or 5 points from here. Folks, look at the British pound yesterday. We're down there trading at 121, and it rallies 160 pips straight up without even any, be able to see what it is. You want to know exactly when it will close? I can do that. It will close at 4 o'clock. I hope that helps, P, because you asked me where the market will close, and it will close at 4 o'clock. I hope that helps. I might be off on the time by a minute or two because of the taking a look at it, so we'll be able to look at it. And the other one is a Snapchat. Look at the Snapchat. I don't know where Snapchat was trading. Got up to 29. It's probably trading about 22. And, that's what, when you get an IPO, one of the folks in the den posted it yesterday. IPO means overpriced. Yes. Oh, what was the I for? Oh, I can't. It's IPO is overpriced. I can't remember what the I was. Please try to help me on that. Boy, these senior moments are coming faster and faster. That's not a good sign. Initially overpriced. That's what it is. IPO means initially overpriced. So just keep in mind that one. I don't know if you remember this, but when Google came out, it came out at about $68 a share. It rallied up to about 115. It backed off to about 79 that day with about an hour to go. And when I landed in Las Vegas, it was trading at 125. I bought it on the 61% pullback. I bought a couple hundred shares, and I couldn't wait to get out of it, the next morning on Monday. But anyway, that's neither here nor there. Okay, let's take a look here. We want to look here at the euro because I think this is the one that's going to be beneficiary of some rocking and rolling here. Because this is over 50% of the U.S. dollar index. You can see the big ABCD pattern up there at the 1.618 expansion. We had the really nice Gartley down there on March 9th. We basically have a 135 pattern working right now from the 106 level. These are the ranges that I'm looking at for the euro today. I think you could get as high as maybe 106.90, maybe even touch the 107 level again, or you could pull down into that 105.30, and I would watch that very closely. So that's what I try to do, is to line up those ranges so that I'm able to see a good entry point, much like what we did in crude oil yesterday, folks. That was not anything hard to do. Remember the soybeans? We were watching July soybeans yesterday. They went exactly to the 61% retracement, to the exact penny, and they've rallied 15 cents. And at that point, you didn't have to risk more than a nickel. You made 3 times that now. You know what I mean? So that's what we're watching here. But remember, there's a lot of people that are looking for this, interest rate stuff, and they're not technicians. And sometimes I question whether I am or not, but that's neither here nor there. We're looking at the patterns. That's what we're watching. But the whole world is expecting that the interest rate will not have any effect of what's going. I will take a look at gold, Tony. I certainly will. I'm going to do that next. We got a quick break here coming, I believe, and we'll come back. I want to cover gold because I think it's at a real critical level, and I'm not sure it's going to be able to get out of its way here. But the interest rates have nothing to do with what's going on with the stock market. With 3 increases in 11 years, I think the Federal Reserve has been on vacation. You know what I mean? It's really what it's all about as we look at this. So the next thing we're going to cover at the break will be gold.
If you're looking to unearth a new financial resource and diversify your financial portfolio, consider the new market-safe core commodity CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 4 equally weighted commodities: gold, copper, WTI, oil, and sugar, in one powerful CD. With no pricing caps, you can potentially earn an unlimited upside payment at maturity if the commodities increase in value across semi-annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There's no annual percentage yield or periodic rate of interest on this index CD. Don't miss out. With certain commodities on the rebound, now is the time to take advantage. The March 23rd funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once more, that's 1-855-750-4051 or visit everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
TFNN has put together the finest live programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 9 hours a day starting at 8 a.m. as John Logan kicks us off each trading day with the Global Market Pulse. Tuesdays and Thursdays. We broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour following the Tom O'Brien Show. Mondays and Fridays. Catch live trading on the Nadex platform with host Tom and Tommy O'Brien along with Daryl Martin on the Bull Bear Binary Option Hour. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Okay, folks, we're going to take a look at this gold chart. This is the one that we've put in the newsletter on Sunday. And as you can see here, we were looking for the market to rally similar to what we did in the BC swing, where we rallied $17. We rallied exactly $17 in the move from 11.94 up to 12.11 and change. And then all we've done now is gone back and forth, not really doing very much. Now, with the Federal Reserve in here today, you could see some pretty crazy volatility, and this market is in a downtrend. So if it breaks, I would be looking at a move down around the 1185 level would be my lower end of the range in gold today, and the high end of my range would be up around 1225. So that's the two ranges that I would be watching in gold. Now, I've been bullish gold for a long time, but this is real critical where we are here, folks, because if we don't hold this level, we're going down. And it is doing exactly what it did the last time on the BC swing. So this could be another BC swing from the other A, and that's going to take it down another $40, and that's going to break us, quite a bit down to that 1160, which is the long-term 78% retracement coming off the low that we made in December at 1126. So that's it. What concerns me about that is that, we made those big ABCDs on the daily in both gold and silver perfectly. And if that's all it's got, it doesn't look good. So I'm still bullish, but I'm going to wait and see what happens. I just, what the Fed's doing has nothing to do with the gold, I don't believe, but the market reacts like it does. So we'll have to keep in mind that that's what I'm looking at. Same thing is true in silver. Silver's acting a little weaker also, but at this particular time, it doesn't really mean very much at all. But whether that's true or not, I don't know. Let's just play a little game here for some fun here, because I'm doing some research. And I wanted to give you an idea. We're looking at this crude oil here. Oh, I think we have a guest coming in. Hold on one second here. And, we got a caller from Philadelphia, Pennsylvania. I know you're home because it's too snowy to go outside.
Yes, sir. Yes, sir, indeed. Good morning to you, sir.
Hi, John. How are you? What can I do for you, my friend?
Say, I would like to pause and let you finish that thought on crude oil. You sparked my interest. So let me ask if you could just complete that thought, and then I'll ask.
Okay. Keep an eye on crude oil at around 48.20. Watch that stock. It's 48.37 right now. I know this is short term, but watch it at 48.20. because if it just stops there and starts to go up, you don't want to be short. But 48.20, and it's only 35 cents or 15 cents away, so it's not very much. But sort of keep an eye on it because of the fact that it's a very interesting chart point. So what can I help you with, my friend?
I wanted to, thanks for that crude oil thought. That's very helpful. I wanted to bring up the topic of soybeans, but before I did, could you just answer the question regarding your comments on gold just before?
Yes.
You mentioned your flats and that you've set up ideas to potentially react to a market move that might or might not occur, at or after Fed time. Is that kind of your tactic when a pattern is mixed and you've got something that you know is potentially market moving to merely just sit tight, and if it either declines to one of your pattern numbers or advances to one of your pattern numbers to merely go opposite? Is that kind of typically what you might be looking for?
Yeah, it's a strategy of, I have an area where I'd like to be long gold. I'd like to be long gold right around the 11.98 level, but with the Fed in there today, it could move $15 either direction. If it goes $15 up, I'll look to buy it on a pullback. If it goes $15 down, I'll have to be really careful because it's breaking down big time, because we've had a perfectly symmetrical move here for several weeks now where the BC swings were exactly equal. Both of those $17 moves, John, were only 38% retracements, and that's not a bullish sign. If you're looking at if you're looking at the gold market, you would think that the bottom that came in here at 11.95 on Friday would have been much stronger, but all we've been able to do the whole week was $17, and that was done on Monday. So this is not acting bullish right now. That doesn't mean that it can't change, and I'll be the first one to jump in there that if it changes. But as you know, we're seeing so many of the commodities have made these big ABCD corrections that ended in December, and now they're all heading to the downside. And if that's what we're looking at here, is we're looking at some pretty deflationary things in some of these commodities. But maybe they hold, maybe they don't. I don't know. We'll have to wait and see.
Yeah, thanks for that elaboration. I love listening to you just share your working train of thought. That's of all the things I've ever heard you do, for me, that was always the most instructional. So thanks a bunch. And speaking as a segue, you had just mentioned gold, oil, and a good number of other commodities have fallen in the past 3 weeks, and that includes soybeans. And this is the market I wanted to just ask you about. I will share this. I am focusing, at this time of year, I always start to I have already focused upon the new crop grain futures, be it July wheat, December corn, and in this particular case, the November soybean contract, because we're just about time to come up with a decent estimate of how many acres we planted in the coming growing season, and then, of course, we get planting underway. And this November soybean contract has pulled back nicely. It's at the bottom of a 4-month range. And since there's always a chance of either a weather threat or outright adverse weather, which could drive price higher, I'm always looking this time of year for buy spots on declines if I can find one, just to try to grab one. And if it starts to advance because of a weather threat or adverse weather, I'm involved in not having to chase. So I wanted to ask what you're seeing with that November bean contract, and if you see a low-risk entry kind of in this price area.
Yes, I posted it into the Tiger Den, and as you can see, we've made a perfect Gartley here yesterday. We also had a hammer candle, and so there was really strong support there in November beans on the lows yesterday, very similar to the July bean chart, except for the fact that this one is much, much more bullish. The July bean chart is basically in a quasi bear market, where this one is in a full-blown bull market. As you can see, we've had higher bottoms. The retracements have been very, very minor. And so if you want to buy beans, November should be the ones you'd want to be buying, because they're the strongest of any of the, the contracts that we look at, May and July and August. And then, of course, when we get into the new crop, where we are with November looks by far the best. So I think you're right there. If you want to buy beans, buy November. It certainly looks the best. So that's my opinion, John. I hope that helps.
No, I appreciate that, and we'll love to hear Rich Anderson sometime soon.
We'll have him on soon.
Thanks so much.
You bet.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and fortunately here at TFNN, we've had some really smart people come on as guests on my show and others, but one of the best, of course, has been Shane Smolian of wolftrader.net, and remember, you know, he's done a great deal of work with the Federal Reserve and how they pump their Fed juice in. He's told us many times to watch the time between 10:30 and 11 o'clock. That's usually when they do their operations. So if the market is not, you know, screaming to the upside after 11 o'clock, that would be the place. And if you wanted to nibble at the short side, you might want to give it a a shot. But if we're up above in a half hour after that, 11:30, if it's still going up, it might not work on that particular thing. But keep in mind that we've been in a very, very strong market for quite some time, but it started to weaken, folks. We really have. And of course, we showed Goldman Sachs yesterday. And then again, the Dow Jones Industrial Average, which has been the leader with Goldman Sachs, running the parade, that has now turned down. Everybody that's bought it after the speech on March 1st or on the 28th of February has now a losing position because all those stocks in the Dow are below that, with the exception of a few like Apple, Johnson & Johnson, and a few others. But 3M happens to be one too. But most of them are far below those levels. And if we look at the IWM, the small caps, that thing has really been hit. So it's not just a one-way market right now. So keep in mind that that's what we're watching as we look at this. But watch that time frame between 10:30 and 11. That's really key, because if we start to roll over at that time, that gives you a pretty good chance. And if it doesn't work, you can always reach Shane by his website. No, I'm just teasing. Anyway, we'll just keep in mind. Try not to do anything till after the Fed acts. It's a lot smarter to do that. We got the Dow up 42, the S&P's up 5, the Nasdaq's up only about 1, but that doesn't mean it can't go a lot higher right away. So we'll watch it very, very closely. So that's what we're watching for today. And keep in mind that the Fed works at around 2 o'clock, I believe the young lady speaks.
TFNN has just launched a special event in Tampa with Tom O'Brien, taking place March 18th, sponsored by Nadex. Tom O'Brien will be presenting 2 workshops for a combined 2.5 hours of education, bisecting and dissecting his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System. March 18th kicks off with a continental breakfast as we get everyone checked in, and that is followed by 2 75-minute workshops with Tom O'Brien. The first workshop from 8:45 until 10 a.m. will cover quality volume, cause and effect, and ABC structures, and the second workshop from 10:15 until 11:30 a.m. will cover swing points, testing, and the Tiger Gartley. Tom will then wrap things up with a question and answer session, which will be followed by a Tiger Luncheon Social on the rooftop of the Westin Hotel. The best part is that it's all free, but you must register to attend. Visit the front page of TFNN.com for all the details and to sign up today, and we hope to see you in Tampa on March 18th.